All right, Capital Funding's borrowers, Central Florida real estate investors, we're welcoming you to our new digital initiative where we're going to try to share our experience and our expertise with you. We hope to do a lot of webinars, a lot of Zoom calls, content that's going to share with you guys wholesaler contacts, insurance contacts, appraisal contacts, realtor contacts, and then market updates too to kind of let you know what's going on in the Central Florida market. And for those of you that don't know Capital Fundings, we are Orlando's #1 local private lender. We've done a lot of renovations ourselves. We've wholesaled over thousands of properties. We've bought properties every which way you can. We want to share our expertise with you. We think this is going to be really, really valuable. We're excited. Our first call is going to be with an insurance agent to kind of explain the insurance world to you, which is maybe a big unknown to a lot of you guys. So we hope you enjoy this, and there's going to be many more to come. All right, everyone, this is Colleen Pacheco. Colleen, if you wouldn't mind just taking a minute to kind of introduce everyone to yourself and your background and your experience.
Hi, thank you. So thanks, Alex. So I'm Colleen. I'm the owner of a Secure Insurance Group. I've been in the insurance industry for about 24 years. I specialize in harder to place insurance, but I can do all types. So harder to place is properties that are undergoing renovations, older homes, new construction, homes in trust and LLCs, commercial buildings, but pretty much all properties in the state right now are considered hard to place because the insurance market is so messed up. So that's just a little bit about me in a quick nutshell.
Okay, great. Well, we love using you. You're fast, which is what we always need. Everybody's calling to close immediately, and that's really important to our borrowers. So we always go to you because we know even if it's same day, we can get this stuff done. So that makes you a lifesaver for us, and that's kind of what we like. So Capital Fundings really focuses on just the fix and flip product. We do some rental properties, but primarily fix and flip. So what are the types of policies and coverages that will cover a fix and flip project that's, typically anywhere from 6 to 12 months?
Right. So if they're doing a property that's going to be renovated, as your loans always are in most cases, they're going to need a property insurance policy that will cover the property while it's not occupied. And depending on their renovation types, they may need just a non-occupied dwelling, or if they're doing major construction or new construction, they may need to add some other policy types in there. In most cases, if it's just cosmetic work, new floors, painting, new cabinets, landscaping, is just going to be a dwelling policy, but it has to be insured as non-occupied. So a lot of times I see people getting insurance for these types of loans, and they're doing like a rented dwelling policy because they think it may be less expensive, but in turn it's not really insured correctly, so it may not be less expensive if they have an event that happens later on.
Yeah, okay. So I've heard the term like builder risk policy. Can you explain that for everybody?
Yes. So that type of insurance is for either major construction or new construction.
New construction.
New construction, if it's being built ground up, or they're doing major renovations, such as a full gut, like they're going to do the drywall, the roof, replace the full AC system, appliances, major work. Typically, whatever they bought the home for, their renovation cost should be at least half of that. So if it's under that and it's just cosmetic, that's really not the right type of insurance to get.
So I know like a lot of our borrowers, they actually do, maybe not like down to the studs drywall, but they are doing AC, they are doing plumbing, they are doing some electrical, and maybe some drywall repair, and then obviously everything else, flooring, paint, trim. So like if they went with that dwelling policy and then something happened, is it possible like the insurance company could come in and say, oh, well, you shouldn't have had a dwelling, you should have had a builder's risk because you've replumbed and you've redone the electrical and you added a new AC and a new roof. So like What's that kind of line? I know you said half of the cost would be renovation, but
So if they're not, it really goes by the occupancy. So if the policy was written to be occupied and it wasn't, that's where they could run into some issues. But as long as the insurance was written for a property that's going to be non-occupied, whether they're doing work or no work, it's still going to be the correct type of insurance. It's just if they're doing major renovations or new construction, the insurance for that is actually a little bit cheaper because they're expected to be there more often. So there's less, supposedly in the insurance company's eyes, there's less risk of something happening and then not, noticing it quickly.
oh wow, so a dwelling's cheaper.
Yeah. So the builder's risk is a little bit less expensive, a slight amount, because they're expecting you to be there every day, either doing,
Yeah.
construction or full, renovation. In properties that are occupied, you may not go there every day. If it's for sale, they may go only if you have a showing or something like that.
So if I was coming in saying I'm buying this house for 200 grand, and I want to put $50,000 in it, and you're telling me that the builder's risk policy is cheaper, could I go that route, or would you say no, you have to go the dwelling policy?
I mean, some people would say you could go that way, but it really depends because, typically, with that policy, if you're doing construction that's ground up or, major work, policy, when you stop doing the construction, the policy kind of doesn't cover anymore because it's supposed to be doing work. So with the builder's risk, I always suggest that if it's like a major gut renovation or ground up construction.
Okay.
You're just doing like with your example, because right now the cost of supplies and materials is like so expensive. So that's like a kitchen, right there.
Oh, that's a nice kitchen.
Yeah, a nice kitchen, right? Or like a bathroom painting, or anytime you do the roof. And I wouldn't really necessarily consider a roof a major renovation.
Yeah.
It's a major update.
Yeah.
People can have their roof done and occupy their home. So that's kind of like a normal upgrade.
Gotcha.
So even though it's costly, pretty much anything you do to your house these days is costly.
Yeah. So on the dwelling policy, they're insured, so our borrowers are fixing the property and then they're selling the property. So when they're finished with the renovations, I think average days on the market's like 50 something right now, but if you've got a nice renovated project, hopefully it's going to sell quicker. So they're maybe from like finish of construction to closing, you may be looking at 2 months. Are they still covered at that point?
Yes, as long as the property remains non-occupied.
Okay.
So if they move a tenant in, then they're going to want to change their, policy type to be tenant occupied.
Tenant occupied.
But if it remains non-occupied, it can remain on that coverage until they sell it.
And so that tenant issue is something where the insurer could come back and say, hey, we're not going to pay out because you guys were doing it differently than what your policy covered.
So if it was written one way and there's a claim that happens, they could deny the claim if they said, oh, it was supposed to be written as occupied and it wasn't, or vice versa.
Gotcha.
In that case, it really depends on the claim that happened, because would the occupancy, change what happened? And it really affects it more like, liability-wise. If it was supposed to be vacant and it's rented and somebody got shot and killed, I'm sorry for the graphic, but this stuff happens, they may say, oh, it's not covered because it wasn't supposed to be occupied. But the vice versa would be if it was, a passerby got shot by somebody who was showing the property and they blamed the homeowner. Well, they weren't living there. These are all like little examples of what actually happened here. But that's why, to make sure that they get the right insurance, like when they're getting their loans, to make sure it's for a property that's vacant.
Right.
In most cases, the properties they're buying are non-occupied.
So
that's like the big kicker.
Yeah. So that's important. That's probably one of the main things is don't put a tenant in there unless you change your coverage.
Change your policy. Correct.
So what do these policies actually cover? Like, we're in Florida. I only lend in like the Central Florida area, but we do go out to the coast. And I know last year we had some issues with hurricanes and stuff like that. So, yeah, so we've got wind issues here in Florida. We've got hurricanes, which could be flooding, but also maybe if you could kind of go over like what it covers, but also like as far as accidents, as far as theft, as far as fire in the middle of the night randomly, like, can you kind of just give us a brief rundown of what is covered and what isn't covered, and maybe if you could get additional coverage to cover something that isn't covered in your basic policy?
Right. So the basic coverage is going to cover anything related to smoke, lightning, if there's an electrical issue, anything that's smoke related, anything that burns. Fire is always covered on all hazard policies.
Okay.
This is a type of hazard insurance.
Okay.
Wind is going to be covered in the central, area where we are. Sometimes when you get close to the coast, you just have to make sure that you read the policy and ask the agent, because if it's within a certain mile frame, the insurance company may exclude wind. That's rare in your cases with your types of loans. So if it covers wind, it's going to cover hurricane. So anything like tropical storm, wind, tornado, hail, that's all going to be covered under that part of the policy.
Okay.
And then as far as break-in, depending on the policy type. So if somebody breaks in and steals something, what they damage breaking into the house is covered. They break the door, they break the wall, they break the outlets, whatever to get in, that's covered. But not all of those policies cover if they steal something.
Mm-hmm.
So because the property is not going to be occupied, it's at higher risk for having things getting taken from them, like the AC units,
right,
for wiring, the fans, those
yeah,
that are always stolen. So with the policies that are for major renovations or new construction, they do cover a break-in and they do cover things that are stolen up to a certain amount. So some policy limits will cover up to, there's no limit, and then some may limit it to a couple $1,000s per loss.
Yeah.
You have to read the policies and ask. But I tell people, if the property is going to be not occupied, some people don't put like the AC units to the very end or the appliances, or they'll maybe put an alarm system in the house and lights that turn on automatically to kind of keep people away. I have one client that has Simply Safe alarm, and he just moves from each property that he's renovating.
Yeah.
So we kind of,
I'm hearing of that more and more.
Yeah, and I feel like it's a good thing because people get bored. It's just an opportunity, and they may watch you, renovating this house.
Oh yeah.
Every day, and they're just watching, that right time.
Yeah. Waiting for the AC to be dropped off, or the appliances.
The appliance, the ACs, back in the days, it was the copper wire.
Yeah.
So that's just something to protect themselves. As far as liability issues, if somebody comes to the property and they get hurt, the policies do cover liability coverage.
Okay.
Now, the caveat to that is if they hire a worker, like a handyman, a contractor, and they come to the property, they start doing work and they get hurt, the liability would not cover them because they're doing work at your house and you've hired them. So another thing I tell the clients is to make sure that you ask the people that you're hiring to work on your properties to show you proof of insurance. And you want them to show you liability and workers' comp. Now, not all contractors, handyman have to have workers' comp because if it's a single owner or two owners, corporation, or how many owners, they can exempt themselves. So they can go to the state and file an exemption form.
Yeah.
And they get proof of that, and they can show it to the property owner that they're exempt from it. I say that because there are some workers' comp inspections or inspectors that will go around properties that they see being, renovated.
Oh, wow.
And who's doing the job. And I've had clients tell me that they came and they shut down their renovation site.
In Orlando, you've had that?
In Orlando, yes.
Interesting.
People working there didn't have workers' comp. So they were making the property owner consider them their employees, even though they hired them to work there and renovate it. So, and I've also had people that have gotten hurt while doing work and they try to sue the homeowner.
Yeah.
But, it's the homeowners hired you to handle that job or take care of the roof. So it's just making sure that they vet through their hiring. We all want to get stuff done, cost conscious, but you can't be penny foolish because it'll come back to you.
So if you hire somebody, let's say, and we know some people mutually that may do this, but they may meet someone at Home Depot says, oh yeah, I do flooring. And they're like, we'll come out and do flooring for my new house, my new renovation project. So obviously they're not with a company and you haven't employed them as part of your company. So you're exposed. If they get hurt, they could sue you, and none of these insurance policies will cover that. Correct?
Right.
Yeah.
Correct. And it depends how they got hurt, right? So if you're showing them that, work that you want done and they haven't started working and they trip over like an open box or like a tree limb or something falls on them in the house, that may be not the same issue as them actually picking up the hammer.
Yeah.
And not at Chloe. But if you meet somebody at Home Depot, not to say it's not a bad thing, because they may be a handyman and they may have liability insurance, and they may have the workers' comp exemption, but you can always ask. And then if they don't have it, maybe you can direct them on how to get it. Because it's not, a lot of people think the insurance is expensive, and it's typically not, and they can pay for it monthly. So if it's somebody that this person wants to be using continuously, I just recommend that you get it. In addition to,
gotcha.
It protects you, the property owner, because if that person comes to your house and they break something while they're installing your tile, or they're installing something on the wall and they hit a water pipe and it causes an issue, which I've had this happen. They hit a pipe on the wall and water's spewing out everywhere. If they don't have any insurance, then you can't really go after anything for any wrongdoing that they've done on your property. So it's like a protection, backlash for them.
Yeah. Yeah. I mean, something to consider because, obviously everybody's in this to make money. And they're trying to save money on the front end, but maybe there's a happy medium somewhere where it makes sense in case something does happen.
A little bit more. You may have to pay a little bit more to get an insured, contractor per se, but you can know that the work's going to be done. And then if you have an issue, you have some, actual recourse.
So ask for insurance on any workers that just show up on your site, maybe.
Yeah.
Unless they're working for a company and can show you that. So, okay.
Exactly.
All right, so that kind of covers like the policies that we're looking at and coverage and what's actually covered. I know, we always have it because, as we said, everyone's trying to save money. So everyone comes to me and says, hey, Alex, can I get a 3-month policy? And I'm like, well, you've got a $50,000 rehab. There's no way you're getting this house rehabbed and listed for sale and sold and closed within 3 months. Typically, we ask for 12 months, and sometimes with our experienced borrowers that really have demonstrated they can get these projects done quickly, we'll go to 6 months, but we prefer 12-month. And I know that a 12-month policy has a little different feature than the 6-month policy. Like you can get reimbursed for any time not used on the policy. Is that correct?
Yes. So the 12-month premiums are typically 25% earned, so which equates to about 90 days worth of time. But the 6-month term, they can actually get half of it back. It's half earned. So it kind of works out the same whether you do a year or 6 month, how much of it is, as they call earned. So they have the ability to get some money back if they take a longer policy, as long as they advise that they've sold it. So after they sell the property, like the insurance company agencies, we're not notified. So a lot of people think that it goes out.
Yeah.
We get told. In most cases, we don't.
Yes.
Some typical lenders will send letters that their loan was paid off, but for these types of policies and regular, renovations, we're not notified. So as long as they let us know, even if it's been after the fact, as long as they have proof that they've sold the property, it can be canceled and they can be refunded, back to that exact date that they sold the home.
So could we just do like a little math? And I don't want to put you on the spot, but you're probably actually good at this math. So on a 6-month policy, if you're spending, let's say $2,000 on the premium, and then let's say after 3 months, they've done the renovation and sold the property and closed it. So they got done in half of the time, 3 months out of the 6-month policy. How much would they be doing to get back? It wouldn't be half, correct?
It would be a little bit less than half, and the reason is because the policies, they prorate them back on the taxes and the policy. They sometimes have a policy fee and an inspection fee that they don't refund.
Gotcha.
Well, they do an inspection fee, so the policy fee, I believe, is like $125. So I'm going to take $125 off of the $2,000, and the taxes, I'm going to estimate what those would be because they do get a proration. And then the taxes are about 6%. So 105 divided by 6 is 1750. If they kept it for 3 months, is that what you're saying?
Yeah.
Okay. So they would get about $870 approximately back.
Okay. And that starts at the 6-month policy, correct?
6 months, yes. And it also starts at a 4 month. So the 4-month term is half earned as well. It's just anything shorter than the 90 days and down, there's no refunds. So if they were to take, any policy above the, 90-day mark, they can get money back on that. But I know with most people, I think 6 months is a good thing because it gives them time to renovate it, get it sold, fix any issues that may come up.
Right.
Or if you're selling it to somebody at falls through, or
Yeah, that's been the big issue.
it gives them time, and then they can still get money back even if they have 1 week left.
Mm-hmm.
1 month, they can still get some money back, and they don't have to repay again because 90 days, as you know, goes by very fast.
Well,
They'll be happy to pay again, and they'll be mad.
Yeah. Well, we have to chase that too, and it's not fun. And nobody wants to respond to your emails when you say, "Hey, your insurance is lapsed, and you need to come out of pocket again."
Yeah, nobody wants to do that.
Yeah.
Like doing those emails. Hey, it's expired. What do you want? And,
Yeah.
especially with it being so pricey and expensive now. I understand. So
Yeah, and that usually they're right around the time that they're getting ready to sell it too. So they're like, "I don't want to put a new policy on for 2 weeks, or a week, but hey, we need you to because you're covered, or we're exposed, we're liable at that point." So,
or two, if something were to happen in that and it's happened before, you're supposed to sell it tomorrow. I had people supposed to sell it tomorrow and it burned down the night before. Well,
right.
And unfortunately, things like that happen. We can't, accidents happen. So we always have to be prepared. So I would get the 6-month policy or longer because you can always get money back at the end.
Yeah. And so I like that too. Let's make it easier on everybody, and you'll just get reimbursed. Just follow up with Colleen. What does a claim look like? I've never done one. I've done myself personally. I've done over 50 renovations myself, and I've partnered on probably over 100. But I've never had an insurance claim. So what does a claim actually look like? What's the process of it and timing?
It didn't look like right now. It looks like a nightmare.
Yeah.
But normally, in the past, claims they didn't happen all that often, so they were handled very quickly, seamlessly. Within a couple months, you would be done, paid out.
Okay.
Well, the average time for a claim, depending on what it is, I've seen some in the past couple months that have been settled within 2 weeks, but most of them take like 4 months. And depending on the larger the claim, the longer it may take to settle it. If it's a lightning strike and the house burned completely down, anything with the fire may take a little bit longer because they got to get the, reports, marshal.
Police reports, yeah.
Incident, and the police report, if there is any, they always have to rule out arson, so they take a little bit longer.
Mm-hmm.
Not all the case, because a lot of those times it's pretty self-explanatory what happened. So typically I say, if you notice something, report the claim as soon as possible. Even if it's the weekend, see if you can get an email to your insurance company or your insurance agent. If you're able to, go to the property, take pictures of it. You can take them with your cell phone, you can email them, text them, however they can be sent. Take pictures. If you make any repairs, just make sure it's like a temporary repair. don't say I'm going to start renovating this whole thing.
Yeah.
Because you want to be able to show what the damage is. So as safely as you can, make a temporary repair to prevent anything further from happening. And then, of course, save your receipts for anything that you've had to pay for. If you also have any pictures, I also tell people, since they're going to be renovating, these people should have pictures before and they bought the home,
Yeah.
during their renovations and after. It's always suggested to keep pictures because you always want to show proof.
Right.
Insurance climate is a little bit testy right now, so they're always going to be like harder. They want to just say no, no, no. You want to be able to back it up. Here's what I had, and then here's what happened. It's just good practice for that.
So let's say worst case happens. Lightning struck your home in the middle of the night, your renovation project, and it burned down to the ground. You make the claim. How do they value what that property was worth, or what they're going to pay out eventually in the claim? Like what goes into that number?
Yeah, so in most cases with the total loss, with these type of policies, they the insured amount, whatever the value is on the policies, would be what they would pay out. So if it's your loan amount is this, because on the policy, they're probably just going to pay that off. With the exception, if you had proof, documentation to show that it was worth greater, but your insurance wasn't greater, they may go back and reevaluate the policy, calculate it what it should have been charged, and then pay you based on that they would take out whatever they didn't charge you for. In most cases, if the house burns completely down to the ground, with these policies, they're insured to as is, or your loan amounts cases. So the loan's going to get paid off. They still have the house. I mean,
Land, yeah.
The land.
Yeah.
So they could essentially start over.
Yeah. I know a lot of people will like wholesale the property. Like, hey, I hear about that. They're like, I'll pay up the loan and then I'll just sell the land to somebody, to like a wholesaler will sell it to some other investor and they make that money back. So
I've seen that happen several times, but as long as they get enough to pay off their loan and some, because their loan amount normally has their improvement costs in it. So, they hopefully aren't going to be in a position where they're out money unless they didn't borrow enough or they paid too much for that.
Well, that's like, I know for us, we require the minimum loan amount, and most borrowers say, just give me the minimum. Do you recommend they go maybe $15,000, $20,000 over the loan amount to cover maybe any costs that could come about? I mean, we're talking a 4-month payout. You've got a mortgage payment. You've got other things.
See, it depends, but I always like to say average 2 months for the claim, but lately it seems like 4 months. Thing that should be paid out quickly. For a larger loss, it's going to take longer because they got more people involved. They got a lender involved, a client. They got the fire department, appraisers, and things like that.
Yeah.
So yes, I would suggest if they wanted to insure it for, maybe either profit in other costs that they have, but they don't want to over insure it too, because you can't insure land value per se. So if you're insuring it for the loan amount, that's including what they bought it and what their improvement costs are. The value of the land should never change. It's always going to be some value within that. They could insure it for a higher amount and then they would just get a little bit more.
Yeah.
I mean, if the house was only valued at $280,000, they couldn't insure it for
$500,000. Yeah.
Doesn't work.
Yeah. Well,
But it depends on what they're putting into it.
Right.
Just have, an estimate receipts for what you've done to the home too.
Yeah. I mean, I know our loan amount, whether it includes rehab or not, the borrower will bring a down payment. So you want to make sure hey, the loan amount shouldn't be the minimum. It should also be whatever you're putting down on the property too, so you can recover that.
Or, yeah, exactly. Or wait, like you said, you pay a down payment. So you're out of pocket what you put down.
Yeah.
So that's still one.
Then you got to sell the land.
Do it, and you got the land, so you can offset some of it. But like you said, it's not cheap for insurance these days. So most times people just want the minimum.
Yeah.
If they even want to get it at all, right? So,
well, do you have any stats that say maybe in Florida in our market, what insurance premiums have increased over the past couple of years? Anything like that?
30, they've gone up like 30 to 40% in the past 2 years, like each year.
Each year,
And that's an average. Each year, the past
30%.
30%. And it's just not, property insurance. It goes across the board to all insurance. But, that's the average. So some may be higher than that, some may be lower, and some rates may have not gone up at all. The average insurance rate for like the yearly home policy is about $4,300 in the state.
Yeah.
So that's meaning that some are higher, some are lower.
Sure.
It's the average. So if you think about that, when I do the 6-month policies and I, add it twice, they're really not that far off from the average
From a regular home. Yeah.
policy.
Yeah.
So, people just got to plan to spend a little bit more.
Yeah. Well, yeah. Work that into your numbers, guys and ladies. So how many of these have you done? Maybe like in the last year, how many do you do? I know we send you a lot of business. I know others are probably reaching out to you. For like the fix and flip product, like the builder risk or.
Oh my God, I should have asked Eddie to help me get some stats.
Just ballpark it, I'm just curious myself.
Yeah, probably on average about 20 to 25 a week.
Yeah.
I think that may be fair sometimes. Yeah, he said right. He told me
That's a lot.
that it's a lot.
Yeah.
And I don't work by myself. I have other people who work with me, obviously, because, the quoting is easy. I can do quotes and certs and invoices all day. It's the back end stuff. Like every check that comes in has to be posted and applied. We got to do like the application.
Yeah.
Send it, and then the policies issued, and then there's always underwriting forms that come back to us. So, and I do home policies, I do rental dwellings, commercial buildings, liability. So there's a lot of different parts, but I like these policies like the best. For me, I could write them in my sleep, and that's what I started doing insurance.
Mm-hmm.
Insurance, I don't want to say it's all the same, but it's all, you get the basic information of what you need, and then you just always build it from there on any type of insurance. And then the more units, the more complicated it gets because you got more questions to ask, etc.
Yeah, most people don't ever account for the back end stuff. Like even with our business, they're like, oh, you just make the money or make the loan and you send them the money and you're done, and you're like, yeah, we got to service it. We've got documentation, we've got post-closing, and then, yeah.
The closing, get the paperwork, then they got to make the corrections. They want this, that. So it's a lot.
Yeah.
Always back and forth.
Yeah.
It's more than just wiring the money to the bank, right?
So if there's a few underwriters, are prices that much different? Like if I went and got a policy quote from you and went and got a policy quote from somebody else, would the prices vary much?
It depends on what types of policies and what companies they're underwriting with. Because there's certain companies that can write these types of policies, but they don't offer wind. So
yeah,
if you're getting a policy that doesn't have wind, of course it's going to be 30 to 40% cheaper.
Right.
But it's not going to give you, most likely, the lender, what they need.
Yeah.
Certain caveats. There's certain companies that don't offer liability, certain ones that do, certain ones that don't have a return premium. They're fully up.
Right.
So those are always things to take into account. Because like the number one question we get is when we call, how much money am I going to get back?
That's all they care about is.
That's all you care about. And I understand it's your return of your investment, your ROI, but you haven't even got the policy yet.
Yeah.
You haven't even renovated the home. But, so there are policies that there's no refunds back. So it may be a little bit cheaper to get that policy up front.
Mm-hmm.
Pay money back. So, there's just ways around it. But if an agent's quoting it the exact same way with the same company, the rates should be the same. Because I don't add any extra fees. So I don't add like a consulting fee, a processing fee, anything like that.
Mm-hmm.
Some agencies may, I heard, but I don't. So.
Well, we know that it's great to work with you, and you guys always do an awesome, super fast job. And I don't know of any claim issues that any of my borrowers have had. I'm sure they have. I just don't see it because it's you to them. But if price is even, what else are they shopping for then? Is it just the service? Is it just, is your underwriter better in your opinion? Like what makes you guys stand out and that, you should be our borrower's trusted source in insurance?
No, because we all would use the same underwriter, so it shouldn't be any underwriter better.
Okay.
I feel like we're responsive, so we answer the phone. I have a lot of clients that call and say other agents, they can't get a hold of them.
Yeah.
I may be on the phone all the time, but I'm going to reply to you.
That's me too. Don't worry.
Yeah, I mean, we don't send out an SOS. I'll get back to you because, certain days like Monday, Wednesdays, and Fridays are crazy.
Yeah.
But other days are a little bit lighter. A holiday weekend's going to be crazy. The end of the month's going to be crazy. So, we try to reply quickly, do the quotes fairly, and explain. For me, even if they don't get a policy from me, if they call me, I just want them to understand what they should get and why they need to get it this way to make sure that they're properly covered. And then, I've had people that have been upset, oh, I don't want to pay the commission. I'm like, well, I'm not charging the extra commission. It's part of the policy. And guess what? Friday night at 6:30, I wrote the policy for her. It was one of your loans too, by the way.
Oh, yeah.
She couldn't get her other agents to reply. But, I'm going to be here Friday night late. I'm going to be available on the weekends if you have an emergency. It's just part of what I do.
Yeah, that's kind of how we operate too. We just make ourselves available. We've got a lot of competition, but, people like using us. We're quick, easy, and they leave us great remarks. So we're doing a good job if you just make yourself available. And you may not always get me on the phone, and I've had a lot of people say you're like one of the hardest people to get on the phone, but I always do respond, and some days it's just maybe by text instead of phone calls. Mondays.
For you. Yeah, that's what some people say about me. And you're like the president. I'm like, no, I'm not. I'm going to talk to you. I'm going to communicate with you one way or another. And it's true. Like you say, there's a lot of competition. I'm a small business.
Yeah.
We're small. So there's tons of competition. So I just want to be, responsible and responsive in my, space and what I'm doing and educate the people that come to me. So that's all we can do. One step at a time.
Yeah. So if a new borrower comes to you, on your call, when you're going over the policy, is the reimbursement something you explain to them? Because I feel like this is like one area that most borrowers have no clue about, that if they do the 12-month policy, they can get reimbursed.
Yes, we explain it. It's over and over. How much am I going to get back? And I'm like, well, it depends how long you keep it. We calculate it, but we tell them it's half earned. So immediately from day one, when you get that policy, if it's a 6-month, term, you're not going to get the
half of it.
Piece of it.
Yeah.
Even if you only if you got the home
for a day, somebody
came and wanted to buy it and you sold it, you didn't do anything, they're still going to keep half of it. It's the company's rules, not mine. And then if it's 90 days policy, same thing, you don't get any of it back.
Mm-hmm.
It's told to them up front, and of course it's on all the documentation.
Yeah, well, we know how that is.
Well, we know. And so, but even if we tell them, a lot of times they don't listen or they don't understand. But
we don't read it.
It is reiterated, right. And, it is reiterated, and we'll explain it, and it's shown in detail too. So we don't ever have a problem explaining that.
Okay. So borrowers, remember, when you sell your property, reach back out to Colleen and say, hey, what type of money do I get back?
Because we're not notified automatically. So, yes, tell us. So, we can probably get it canceled for you.
Well, this has been great because honestly, I didn't know the differences in the policies, and I was not 100% sure as to kind of what's covered, especially, as you get out to the beaches, which we're doing a lot of loans in Volusia and Brevard lately because the prices are a little bit lower than Orlando. So, this has been like really, really good information for me. I know I'm going to use it, and I'll be definitely a little more informed when I'm speaking to my borrowers about insurance. So what's the best way, usually this is like a last minute thing. Oh my God, I didn't know I have to have insurance, and closing's in 2 hours. What do I do? And we have Holly reach out to you and coordinate it. And so, but what's the best way for borrowers to get a hold of you? If you want to just kind of leave a plug.
If it's an emergency, like 2 hours, call. is email, but sometimes your emails, I'm going to get to them, but they may be like at the bottom.
Yeah.
Depending on the time and the day. So call, especially if it's a rush, they can email, call 407-559-2200. If I'm not available, somebody will take the information and get it to me and say it's urgent or closing in an hour, like I had today. So, call, email, text. If it's like late at night and you can't get a hold of me, they can text and say, hey, we're closing tomorrow. Do you think you can help? 407-725-3413 is my text. And then the email would be Colleen, which is Colleen, so 2 L's, 2 E's, at secured insurance, GRP, group.com.
Yeah, and we've...
I had all my contact information and everything, if anybody ever needs it.
Yeah, maybe do that, and we'll add it to the video at the end. I don't know how all that stuff works. This is our first video, so... But we'll try to get it added for you. Anything else the borrower should know about insurance?
Just make sure that they get the correct type of insurance, and that they understand what policy covers and what it doesn't up front, and then understand the refund, after they sell it. They know how to get money back. And then just always, if they want a review on the quote or something that they've gotten, I can review it and explain it to them. But if they do need it and they're closing, just call us ASAP to get it done.
Yeah, and we can help coordinate it too, because we're a lifeline where they come to us usually and freaking out, and we just put them in touch with you. You know how the drill works, and it happens like once every couple weeks at least. So, well, great. Thank you so much for informing myself and hopefully everyone else. I think it's been an awesome, 20 minutes. So I really enjoy it, and I know I'll be talking to you over email, I'm sure, plenty of times this week. But yeah, send us your information. We'll try to get it posted. And thank you so much, Colleen. Everyone, if you need insurance, like she said, she answers the phone, she answers her emails, and in a bind, she'll get the policy bound, right? Right? So
in an hour or so. Yeah.
There you go. So highly recommended. All right. Thanks again so much. All right.